I want to start with a question. Have you ever worried that if a hacker somehow accessed your bank account, they could not only steal your money, but you might end up paying extra fees or even face an overdrawn account? It's a concern I hear from seniors all the time. And honestly, it's a valid worry. This new banking rule that just got approved is designed to address exactly that. It's meant to give you more protection and control over your money. But at the same time, many people are confused or even nervous about what it really means. Before I go any further, if you rely on Social Security, retirement accounts, or federal benefits, or if you just want to stay informed and protect your finances, take a moment to subscribe to the channel. I share updates like this all the time, and you won't want to miss them. Now, let's get into it. The core idea behind this new banking rule is pretty simple, but the way it works can seem a little complicated at first. Basically, banks now have more authority to temporarily freeze accounts in certain situations. That might sound scary. Your money isn't immediately accessible, right? But here's the reasoning. Imagine a situation where a hacker gains access to your account. Before, your bank might only alert you after the fact. By that time, the hacker could have withdrawn money, and you could face overdraft fees or worse. Under this new rule, banks can act more quickly, freezing suspicious activity to prevent overdrawn balances or theft. Here's what this means for you. If you're receiving Social Security, SSI, or SSDI payments, your deposits could be temporarily paused if there's any unusual activity in your account. That sounds alarming, but in reality, it's a safety measure. Banks are trying to protect your money before it disappears. Think of it like a security guard stepping in before a break-in happens. Let me give you a concrete example. Consider Joan, who lives in Des Moines, Iowa. She receives her Social Security payment every month on the second Wednesday. One day, her bank detects a large transfer request that doesn't match her usual spending patterns. The system flags it, and her account is temporarily frozen. She panicked at first, but when she contacted the bank, she learned it was a precaution. Her actual Social Security payment wasn't at risk. In fact, if this rule hadn't been in place, that suspicious transfer could have gone through, leaving her with a negative balance and possible overdraft fees. This is where many people get confused. You might be thinking, my bank could freeze my account even if I didn't do anything wrong. Technically, yes. But most banks now have fast processes for verifying legitimate account holders. If you get a notification or a temporary hold, contacting your bank quickly usually resolves it within hours, not days. The key is knowing what to expect and being proactive. Now, let's talk about Social Security specifically, because I know that's top of mind for many seniors. Right now, in 2026, the average monthly Social Security retirement benefit is about $1,800. For someone on SSDI, it might be slightly less, around $1,400 a month. Your payments are deposited on set schedules. For example, if your birthday falls on the 1st through 10th of the month, you typically receive payments on the second Wednesday. If your birthday is between the 11th and 20th, payments usually arrive on the third Wednesday. And if it's the 21st through the end of the month, the fourth Wednesday is your deposit day. The concern is that a sudden account freeze could overlap with these deposit dates, making it look like your payment didn't arrive. That's why the new rule requires banks to notify you immediately if any action is taken. You're not left in the dark. And in most cases, once the bank verifies your identity, the freeze is lifted within a very short time. Another point to consider is COLA adjustments. This year, seniors saw a 3.2% cost of living adjustment to Social Security benefits. That means someone receiving $1,800 per month would see an increase of about $58. That extra money could be affected if your account is frozen, but again, the bank's notification system is designed to minimize disruption. You won't lose your COLA. It just might arrive a little later if your account is temporarily held. So what should you do to prepare? First, make sure your contact information is up to date with your bank. This includes phone numbers, email addresses, and mailing addresses. Banks will use these methods to reach you if there's any suspicious activity. Second, set up account alerts. Most banks allow you to receive notifications for transactions over a certain amount, or even any withdrawals and deposits. This way, you're always aware of what's happening in real time. Third, maintain a small backup account if possible. This doesn't need to be a big fund, just enough to cover a few days of bills if your primary account is temporarily frozen. For example, Imagine Sam in Tampa, Florida. He keeps $200 in a separate savings account. One morning, his checking account is flagged and frozen. Instead of missing rent or utility payments, Sam uses his backup account while resolving the issue. That's peace of mind. Another common question I hear is about overdrafts. This is really important. One reason banks implemented this rule is to prevent your account from going negative due to unauthorized withdrawals. Before, if a hacker stole funds, your bank might cover the immediate transaction, but you could still be responsible for overdraft fees if the system didn't catch it fast enough. With this rule, the freeze happens first. That's why some people might feel like the bank is controlling their money, but in reality, it's preventing extra charges and headaches. Now, let's talk briefly about state assistance programs. Many seniors rely not only on Social Security, but also on supplemental programs like Medicaid, SNAP, or state-specific energy assistance. Your bank account freeze could impact automatic withdrawals or payments from these programs if your account is temporarily unavailable. That's why it's smart to inform any program that you might be subject to these new bank security measures. Most programs have procedures to handle brief delays. The goal is not to block your benefits, but to protect your funds. Budget planning becomes more important under this new rule. Even if freezes are temporary, knowing your cash flow helps. For instance, Jane in Denver, Colorado, schedules her bill payments a few days after her Social Security deposit. That way, if there's a brief freeze, she avoids late fees or penalties. This small timing adjustment can make a big difference in peace of mind. Another practical step is keeping digital copies of your account statements and Social Security correspondence. If your account is frozen and you need to verify deposits, having records on hand speeds up the resolution process. I recommend keeping the last 6 months of statements either digitally or in a secure folder. Now, let's address one more concern I hear often. Could this rule affect direct deposits of stimulus payments or extra federal benefits? The short answer is yes, but it's unlikely to cause any permanent loss of funds. Banks will hold payments only temporarily if there's suspicious activity. Once your identity is verified, the deposit is released. That means seniors shouldn't panic if a stimulus payment or one-time federal benefit shows a short delay. Here's a tip for seniors on fixed incomes. Keep a simple calendar of expected deposits and withdrawals. Include Social Security dates, utility bills, rent or mortgage payments, and any automatic subscriptions. This way, if your bank places a temporary freeze, you can quickly see which items are at risk and take action. Let's go back to the core concern: theft and overdrawn accounts. This new rule is part of a broader effort to protect consumers. Banks are under more regulatory scrutiny now. They have to act responsibly, notify customers, and resolve any issues quickly. That means seniors are safer than ever from hackers draining accounts and unexpected fees. Now, a lot of people worry about how aggressive this rule might be. Could banks freeze accounts unnecessarily? The answer is, it depends. Banks use sophisticated algorithms to detect unusual activity that can sometimes flag legitimate transactions. For instance, if you suddenly buy a large appliance or pay for travel, your account could trigger a temporary hold. The important thing is to respond quickly. Call your bank, confirm the transaction, and they will usually lift the freeze the same day. Here's another example. Bill in Atlanta, Georgia, was traveling and used his debit card for a hotel booking. The bank flagged the charge because it was outside his usual pattern. His account was temporarily frozen. Bill called customer service, verified the transaction, and within an hour, everything was back to normal. These are exactly the scenarios the rule is designed to protect against, not to punish you. If you're receiving multiple benefits, like Social Security and VA compensation, it's important to know that each deposit could be impacted separately. Keep track of deposit dates and consider setting alerts for each account. This way, if one account experiences a freeze, you still have access to funds from the other. A practical strategy some seniors use is to stagger automatic bill payments. Instead of paying everything on the first of the month, schedule some payments a few days later. That cushion gives you time to resolve any temporary holds without incurring late fees. Now, let's touch on a common question. Can banks permanently withhold your Social Security funds? Absolutely not. Federal law protects these payments. Even if your account is temporarily frozen, the money is yours. Banks cannot take your Social Security to cover debts or hold funds indefinitely. The freeze is strictly temporary and procedural. For anyone concerned about identity theft, this new rule actually gives you an extra layer of protection. Previously, you might not know someone accessed your account until a week later. Now, suspicious activity triggers immediate action. That's a big advantage, especially for seniors who might be targeted by phone scams or phishing emails. Another thing to remember is that your bank might ask for additional verification. This could be as simple as a phone call, a text code, or a secure online message. Make sure you have these options enabled and keep your contact info current. It's a small step, but it can prevent unnecessary stress. Let's talk briefly about practical, everyday steps. First, don't rely solely on checks or physical statements. Use online banking or mobile alerts. You'll get real-time updates on any freezes or unusual activity. Second, know your account balance. Even if the bank freezes your account, you'll be able to track what's available and what's pending. Third, have a list of important phone numbers handy: your bank, Social Security office, and any other benefit providers. Quick communication speeds up resolution. One final point: consider talking with a trusted family member or friend about your account security. Sometimes a second set of eyes helps catch unusual activity. If you have a trusted person, they can assist in confirming legitimate transactions quickly. So let's summarize. This new banking rule is designed to protect your money from theft and prevent overdraft penalties. Your Social Security and other federal benefits might be temporarily delayed if suspicious activity is detected, but these delays are short-term. Banks must notify you, and funds are quickly released once verified. By updating your contact info, setting alerts, maintaining a small backup account, and keeping a calendar of deposits and bills, you can minimize any inconvenience. Remember, this rule is about control, but it's your control in the long run. The bank acts fast to prevent loss, but your money is safe. The key takeaway is simple: stay informed, stay organized, and respond quickly to any notifications. That's how you keep your finances secure without stress. I want to hear from you. If you're watching this and you live in a particular state, drop your state in the comments. Share your experiences with Social Security deposits, account freezes, or any benefits you receive. That way, others can learn and feel reassured, just like you. You don't have to panic about this new rule. Think of it as a safety net that catches problems before they affect you. With a few small steps, you can protect your money, maintain access to your benefits, and continue enjoying financial peace of mind. And that's the important part. Knowledge is power, and now you know exactly what this new banking rule does, how it affects your account and Social Security payments, and what practical steps to take to stay secure.